Hello, Face. Morning, Kevin. Patrick, how are you? Ziggy, everybody here today. Wonderful Wednesday. Wonderful for people that listen to Blake Morrow for the last week and a half. Being bearish at the end. I know Blake really doesn't care for me validating his work, but too bad. It's one of the reasons why I came here. So just a quick refresher. I remember the NFP. Blake wanted to sell the yen at new highs. Instead, the NFP went the other way, and the yen sold off and then recovered. And then he got his scenario Monday with the false breakout, and has been talking and mentoring the whole community for a few weeks now, giving the technical reasons. Then Volgi backed up the technical reasons with a wedge that we had a breakdown from, showed it sitting on the ledge, using also the correlation with the Nikkei exploding to the upside, and that people were wrong-footed, being long US dollar yen, probably getting a little frustrated, then a little nervous, and now beginning to capitulate. So hats off to Blake. So you really don't even have to sign up for the service to do well. But if you are doing well in our free webinar, the way to say thank you and support our work and what we're trying to do, because our mission is to build up and edify traders every day. And I believe that we do that. I don't say that arrogantly. I say that because I know we do. Just by, I watch the videos. Okay, I watch our session, look at all the pearls that the whole team is providing, and I go, wow, you know, this webinar is worth, you know, minimum $99.99, don't you think? Anyway, so a great call by Blake here, and if you're curious about targets, and I think Blake talked about 11.5, but here's the next harmonic on it now, okay? Almost looks like a diamond, and she's looking for 111.65. Okay, did you hear that, Steve? People would happily pay for our webinar. Well, you know what? We want to do a good thing for everybody, Kevin. So, you know, we believe that if we plant good seeds, and that means letting everyone come here without any kind of financial commitment, that the seeds that we plant by doing that end up manifesting into loyal subscribers, and we have hundreds of them. So I would say reap what you reap what you sow. Biblically is playing out with our business model. So that's our model. And here's Nick's look. So you know, the dollar, I really, this is really was a trade of the day. One thing I do want to ask Steve when I toss it over to him, because we did get the yen break, the metals are looking okay. I want to see his triangle and see if it's probably still in the triangle. It held one more time. Silver actually looks a little bit better to me than the gold. Looks like it could come out of here if we don't fail today. 1780 is still viable in my view. Euro pound, that was a good call from just being in the free room, buying it last week. You know, even I come up with a decent idea, maybe one a week for you guys. So this was a good idea. You can't short it yet. It's beginning to diverge, but I'm thinking 91 or so for potential shorting opportunities. Clean out all the stops here that maybe, I talked about this with Steve, that maybe we get an A, B, C. So I'll be looking for divergences and potential 3-drive patterns setting up here. Probably would be, you know, around 61.8 up here, around the 91 area. And then I think we could have a good break. So this is going to be a big trade. This was a big trade. These were trading opportunities. This could complete the correction of this big decline, which was one heck of a decline, about 500 50 pips. So if we get equality from 91, you're talking about 85.5. If you get a fib extension of this, I know there are a lot of long-term targets of 84. So keep some powder dry, because in the next, I figure another week or so, I think there's going to be great shorting opportunities in Euro pound. Okay, Luca, why don't you, Steve will give you his email, or Stelios. You mind responding to that, Stel or Steve, or Luca?
Sorry, what's that again?
Luca signed up for the rebate program. He's having a little bit, yeah.
Okay. I will get in contact with him. Okay, I will get in contact with him.
All right, thank you, brother. You're very welcome. I'm glad that you cleaned up on EuroCAD. Nice for you, Alexander. So what's the batting order today? Is it Blake coming in, or are we going back to Steve, hand the baton to Steve?
I'm
Nostravolgi. You, buddy?
I'm going to be starting today, and Blake is going to be with us in 25 minutes.
Okay. So I understand you really enjoyed that interview yesterday on the COT. I never saw it broken down like that. I think I'm still using the old way. He pointed out that some people are still using the old, the way they did it 5 years ago. Were you aware of the new breakdowns? You were probably using the new breakdowns.
I was aware of plenty of the things he said. Hadn't been viewing some of the things he explained that he's paying attention to. It's obvious, that he's done great research in the CODs.
Yeah.
And I think that very valuable lessons were learned, and I'm actually going to get in contact with him today, so we can see if we can, somehow make use of his analysis.
Well, that would be another arrow in the quill.
Yeah, something.
You know what I mean? Yeah. All right. So we got the breakdown. You saw the wedge in the end, Steve, and kudos on that. And you got to feel pretty good about action in the Nikkei, all bounces that failed in indexes.
I had no doubt about the Nikkei once we saw that day. But
stay humble, my friend. Stay humble.
But Blake was far ahead in the USD yen thing. His intuition is impeccable in things like that.
You're almost as good as me, man.
I'm always, the guy that wants to go with evidence, but Blake, leans a lot on his intuition, and his intuition is like.
Yeah, Blake, you're like one of the disciples. You're the doubting Thomas, and Blake, right? You have to put your hand in the hole to make sure it's real.
Yeah,
so
but
go ahead. Go ahead, doubting Steve.
The more time passes, the less I've learned to try to avoid doubting Blake's intuition, because he's usually a lot more times right than wrong. And I've told you that in the past as well, that I remember when the dollar
last year
was about to turn bearish. He was bearish the dollar for like some weeks ago, and I was like, what the hell is he saying? You know what I mean?
Yeah, I know.
And he always gets that feel a little bit early, but it always gets validated in the end, or not always, but very, very often.
Because he has a holistic view of the market. I think you do too, but him more than most people that I've known or interviewed.
I really don't know what it is. I mean, it's obviously that as well, but I think it's like some kind of talent as well. I'm not exactly sure. It doesn't really matter.
How about traders' intuition from all the screen time that you had?
That definitely plays a big role.
Yeah, but you see things happening beneath the surface that others do not.
Yes, yes, that definitely is one of the reasons, but I also think that it's talent as well, to some extent. You know what I mean? All of that you mentioned play a role. There's no question about it.
Yeah.
But you
Okay.
know, some talents, you know, are there for a reason.
Okay, so why don't you display
Definitely, I'm gonna
yours
grab.
now, and
Yeah,
you're doubting Thomas' technical work here.
I'm gonna grab the
And,
screen.
give us all your confirmations now.
Definitely.
Johnny come lately.
Okay, so first of all, let me see if we had some early questions. CHF is too expensive. What do you think about Aussie CHF cards? Okay, and okay, we're going to have a look at those a little bit later. So first of all, let's start by the very basics. The euro has obviously been rebounding in, you know, in quite an emphatic way. Especially, you know, the last couple of days look quite impulsive. Today we are already the 6th consecutive up day. Of course, it's too early to know how it's going to close, but you know, that's how it is for the time being. And you know, for me, everything is about the confluence of this horizontal support resistance in this case area and the 61.8. So I think that, you know, any break above there is you know, the final confirmation that, you know, the correction is over and we're probably headed quite likely to even push to a new high. So obviously, as I said yesterday as well, you know, you cannot be bearish to the Euro USD after all that, and after seeing how the corrective price action was slow and choppy. But on the other hand, you know, if you want confirmation, this is the area, this is the level, because, you know, a first rejection from there, especially after the run we've had the past few days, I think is quite likely. And, you know, this might get some people trapped short, some people that believe, you know, that this was just a shorter term rebound. But I think that, you know, the chances are much higher that the next move is going to be higher. You know, even if we get a pullback, even all the way down to 116.80, I think we should expect that area to act as support from this point on. It was acting as a resistance.
I think it'd be a great buy down there on a pullback. I think you're right. Even though there's like huge longs in there, Steve, I do think that they're, you know, people still are looking for that next breakdown, you know.
Yeah, I think so as well. I think so as well. On the other hand, Euro Yen has also been chopping people around. You know, this is one of the reasons I've been so much insistent in the importance of daily closes, because if you wanted to jump the gun in the Euro Yen had actually broken below the range support 4 days during the past couple of weeks. Okay, 4 days. And every single one of them, it actually reversed to close right on top of it or even above it. And, you know, a market that keeps failing to break down, at some point is going to rebound. And that's exactly what happened with the Euro Yen. Now, does that mean that it's going to break to new highs? You know, more likely than not, yeah, it can do that. But on the other hand, you know, this has been a very, very well-defined range, and I find absolutely no reason why somebody should be buying up here or selling down there unless we see a break. Because if we do see a break of this well-defined range, I think that the probabilities are that the next move is going to be decently extended. So I think it's one of the cases that it's worth waiting for a breakout of the area, perhaps even a retest if you want to be like super safe, and then getting involved with it. Okay. Now having to do with the USD Swiss, the USD Swiss is breaking below this, that could have been a bull flag, in which case that tells me a lot. I mean, the fact that we're now overshooting what would have been a very orderly way of, you know, correcting lower, tells me that we might get acceleration lower. The next area of support for me is down at 0.9750, 60. You can see, if you look back at the chart, that it has been an area that has acted as a resistance multiple times. So it's very, very likely that this time is going to act as support. Okay, so obviously we got rejected from there as we expected, but I'm not sure at all that this area is going to act as support to see a new high. Of course, it's early in the day, but if we actually do close below there, I would be looking lower here as well, which also goes well with the possibility of Euro USD remaining, strong. Having said that, obviously the DXY has now officially invalidated the inverted head and shoulders. Also, it has broken below this confluence, because I remind you that we were also monitoring at this ascending trend line, which could have acted as support. It also coincided with the inverted head and shoulders, so that would have been a perfect opportunity for the DXY to prove that it wants to remain bullish. Now, having said that, it's not that I'm like, super bearish as long as the 93 level is holding, but definitely, my bias has switched from neutral to bullish. I was bullish in the short term. I had said plenty of times that, in the medium term, I remain bearish, but in the short term, I expected that the rebound might extend to 96, which was the 38.2, or perhaps even a little bit higher to the 200 DMA. That doesn't seem to be the case. But on the other hand, I think that we need a break below 93 to confirm, an acceleration perhaps of the depreciation of the dollar. Now, this is also one of the reasons why I've also, I've had a good month so far. I've taken like 1.5% losses in my attempt to be long the IBEX, but I'm almost 5% in the money in the Nikkei. So no matter what I do, I also had the USD SEC, which yielded some profits, and no matter what I do for the rest of the month, I can be having a good month, roughly like 3-4% up month as it is. So I have no reason of taking risks in things that are not moving. So I'm going to be probably be cutting. I cut today just 20 pips lower, half of my cable short by registering 41 pips of loss, and I might be getting rid of the rest of it, but not yet. I'm monitoring LC. I'm gonna keep half of it. I've already also reduced at the money, barely out of the money to be honest, but almost at the money. Furthermore, my SPX and my Dow Jones, because I now have the Nikkei that's yielding great profits. So I'm going to be keeping a total position for the SPX and the Dow Jones that's roughly 2/3 of a regular position in total, the two of them. And I still have 2/3 of my my initial Nikkei position, which was from 23,000. I had actually two entries. The average was at 23,000. So I have no reason to risk ruining a perfectly good month. Obviously, the dollar needs a little bit more time. I have to tell you that I remain, despite of what we're seeing in the price action, I remain bullish the dollar against specific pairs. So, for example, this is the Nikkei, by the way. We're approaching the 38.2. I might cut some further of my position. Perhaps I'm going to take it down to 50% or even 1/3 and look to re-add higher. But I have to say that I remain bearish the Aussie USD. So I remain bullish the dollar against the Aussie. You can see why. I mean, it didn't even manage to put on a decent rebound. I mean, that was simply like a flat consolidation before actually pushing lower. Today, we actually tagged the support area I had on my chart, but I really do believe that the triple confluence that we find that 0.75 is going to be most likely than not the next target. This triple confluence, if I zoom out, you can see that it is the 78.6 of this move higher. It's also horizontal support resistance area, and it's roughly where we find an ascending trend line that was defining the triangle that was in play for several months in the Aussie USD. So it was the triangle's support that comes into play, in a few days at around these levels as well. So I'm still looking lower for the Aussie. And if we go to the Kiwi, we are seeing a decent rebound today, but that doesn't change the fact that I expected the rebound to 69.70. Actually, that played out, perfectly. Not every time, you're watching an area, it plays out so well, but that's why you always have a plan. So, for the time being, I'm viewing this as a bear flag. So why not a breakdown to new lows there as well? Okay. So I'm not outright bearish the dollar against every currency out there. Now, having to do with silver and gold, since you asked about them, I can tell you for sure the following: that obviously some dollar weakness is spilling into them, but neither of the two has broken above the triangle. We are seeing that silver has confirmed multiple times that this is actually a triangle, and this triangle does matter, because we've had multiple tests of support and of the resistance. We're now almost at resistance once again, so I wouldn't be jumping the gun that it's going to break higher or lower. Although I've told you that usually these consolidations break to the direction of the trend, to the previous move, which is lower in this case. Regardless, I wouldn't be jumping the gun, because we have had no technical event yet, and especially gold has some more room to run to the upside, more than silver has. So I still have no position here. I've said multiple times that they remain too range bound and too choppy for my taste. There are better opportunities out there, so why getting involved with them until we get some more clarity? But that doesn't mean I'm not tracking them down, and by tracking them down, I'm telling you as a fact that they haven't given us a technical break. What is about to give us a technical break, though, and it's something we discussed a few days ago in the chat room, and this is another nice example of how well candlesticks work sometime. I mean, the important formations. This was an evening star formation here. This is palladium, by the way. This was an evening star formation there. We also had an overthrow of this wedge, and we're currently breaking below it. I have to be honest, I'm not really enthusiastic about the momentum we've been showing the last 3 days, but I'm, this is something I'm closely monitoring. I might get involved with this. So if I am to get involved with one of the metals, probably that's going to be palladium.
Nice 3 drive.
Yeah, it is also a nice 3 drive, as you said. You can see clearly on the RSI, that we had been getting higher highs, and the RSI was obviously not following through with that. Also, if we zoom out here, people are going to see that the least to say, palladium has been overextended to the upside. It has been overperforming by a lot other metals for fundamental reasons as well. There's no question about it. But this is something I'm monitoring. Copper, on the other hand, because I know we have several friends that on occasion are asking about it, copper has still not broken to the upside, but on the other hand, it's still moving lower in a very orderly fashion. So I think that switching to a bearish bias at the moment does not seem very prudent, because the evidence do not point to some kind of like breakdown or trend reversal here. Okay.
Yeah, it looks incomplete. Looks like we could have another high.
Yeah, that's how it looks to me for the time being as well. Yeah. Exactly. So that was a masterclass COT, Andy says. Yes, and by the way, for those of you that were not here yesterday, or you didn't stay for the interview, I strongly suggest you can go to our YouTube channel, to the ForexAnalytix YouTube channel. You can just simply type ForexAnalytix in YouTube, or you can just go YouTube/C, that's for channel /ForexAnalytix. That is our channel. You can find there all the interviews and the webinars posted. It's really worth watching yesterday's interview because it's a great explanation of how COTs work and what you should be monitoring in the reports we get every Friday. Okay, Blake, by the way, I need to remind the people that joined in late, is going to be with us within 10 minutes. So let's have a look at more questions. Hello, I have questions for you. Why yesterday and today EuroCAD has raised so much? Thank you very much. Okay, let's have a look at the EuroCAD. First of all, the answer to that is because Euro has been very strong. There it is. Okay, so the EuroCAD actually managed to hold this support zone that we had indicated. Last time we obviously checked, we were down there, and they said that if we break below there, since we had already broken this trend line, it's going to go lower, but it never did so. So as you see, support resistance areas are extremely critical, because as you see, we had been testing this one several times before, but 1, 2, 3, 4, 5 consecutive days, we never managed to break below it, and boom, there it is. It exploded higher. Obviously, this is a bullish break. So now we obviously need to do some redrawing here. Let's see what we have with the EuroCAD. Okay, we're testing the 78.6 once again. I believe that it's quite likely that we're going to be breaking to new highs. This is now obsolete. This is now obsolete. I would say that as long as we hold above this area that I just marked, you can remain bullish. Okay.
Yeah, Jeff is looking for 910 palladium. He's been trading it. You and him are the only ones that trade it. And his
910, very likely actually.
Yeah, and Jeff is he's an excellent trader. Very good trader.
I have no doubt. Yeah, I know that you remember everybody's trades, and
well, he's been hanging out with me for years. So I mean, you get to know after a while. With you, it only took me a week to know that you knew. But a lot of guys from LAR, they every day they'd be showing me screenshots, so you could kind of tell after a while who has a feel. Yeah, he's one of them.
Well, I know exactly what you mean. A friend is asking if he missed analysis on the Dow. No, I haven't said something specific. I can tell you one thing for sure, is that the Dow still hasn't managed to put in a daily close. I said yesterday that for me 23,250 is an important level. We still haven't managed to actually close below it. Okay, so for me, this is the level I'm monitoring. Now, having to do with the SPX, has been rejected from this channel. It has also dipped below that channel. On the other hand, we also don't have any big acceleration to the downside. That's why I keep reducing my positions, since I'm fortunate enough to have caught that Nikkei short, and it's doing so great. I have no reason to keep high exposure in the US indices. But I have to tell you that still my intuition tells me that we are very soon, if not already, seeing the beginning. We're going to get weakness spilling over to the US indices as well.
You know what? I have an old Wall Street expression. I'm old, so I have a lot of them. And
plus you have a good memory.
NASDAQ and Russell have been the weakness, and the Dow has been the strength. And there's an expression that when the troops are retreating, eventually the generals get slaughtered.
Yeah.
You like that one?
Yep.
And the Russell, the Russell are the troops, and the NASDAQ are the troops, and they're withdrawing.
Yeah. Here's the NASDAQ as well. It's also been breaking below a very steep ascending wedge. But on the other hand, we still haven't seen acceleration. You know,
I guess the Russell is a weak one.
It is the weak one, but you know something. Even if you look at the Russell, it is much weaker. There's no question about it. But really, you know, this is not an impulsive move either, right?
You're right.
It isn't.
But the Nikkei was, and the DAX.
Yeah.
So
yeah,
you know what? Okay, so maybe what happens is when the weak ones like Nikkei and DAX rally for a B or a 2, the U.S. indexes that haven't given up much ground, while they're rallying in B or 2, U.S. indexes actually retest the highs or make new highs. What do you think?
Indeed.
Hello, guys.
Hey,
Greg will tell us.
Welcome to the company.
Yeah, the wizard. What do you think of that, Greg? Is that, you know, the Nikkei and the DAX has been more impulsive than U.S.?
By the way, let me give some data that we had. CPI was, I didn't want to interrupt you because nothing great. CPI was 0.1 month on month. 0.1 was what was expected. Manufacturing index undershot. The year-on-year CPI though was stronger, was 2% in comparison to 1.8 that was expected. Empire manufacturing though was 19.4 versus 25.1 estimated. We also had some Canadian data. Expected was 0, but the actual retail sales was 0.2, so a little bit better Canadian data there as well. But from what we're currently seeing, let me switch.
Dollar CAD is actually ticking higher.
Yes, and you know the USD yen hasn't done much. Let's have a look at the Euro USD. The Euro USD hasn't done much either. I think that Greg, since he's here and you know he wants to be in our company, I don't know though Blake should be here soon. So I don't know if you wanted to first talk about what you see happening here with bonds, Greg. Is this a triangle, mate?
Just a second.
The 10-year one I'm looking at the moment.
You're looking at the 10-year.
Because
it looks like if we are either in sub wave 2 and going lower, or we are still in that wave C from recent 124.60 swing.
Okay. So you mean that we might have another, like an A, B, and a C higher towards the 38.2 perhaps, right?
That's possible, yes, but I would not be surprised if this current candle would be reversed. Okay, because if you will switch to lower time frame, you will see that actually those 1, 2, 3, 4 red candles will actually had an impulsive quality.
Why don't you just show us what you're seeing? I just passed the screen.
Just a second.
And by the way, the moment you popped up, we already have Lee saying, can you please tell Greg to analyze crude oil? Thank you.
Okay, sure. Okay, so you can see this was a 5-way fall, okay?
Yes.
On 10-year US notes. So actually, I realized that current recovery is quite sharp, okay? But because recent decline was in 5 waves, I will be watching for a new reversal signs, okay? So if we see a drop, let's say back to wave B levels, if this was a small wave B, then probably I will continue to look aggressively to the downside and expecting a break below this 124.06 level. Okay, but all in all, I still think that any rally is going to be corrective simply because this move up, as you know, we have been tracking this for a while from start of 2017, had a corrective shape, and a downward reaction through this trend line was very strong. So I think that any rallies to the upside is going to be limited sooner or later.
Yep, no, I'm with you.
So that's for 10-year US notes. Now also what would I like to talk about today is about dollar index. As you know, I have been looking this for to be wave 4, okay? And it looks like that we are now having a confirmation that this was actually a wave 4, a corrective temporary bounce, and that we are headed to the downside. This head and shoulders pattern that everyone was looking for failed. A lot of wrong positions were put on, so I'm actually not a surprise. You know, head and shoulders pattern works very, very well, but if you know how to combine it with the Elliott wave principle, it could work even better. And simply, I didn't turn bullish because we haven't seen a completed 5 waves of decline. Okay, so that's why this head and shoulders was actually not so damn important to me. Okay, and also we were still trading below this trend line resistance connected to from 2017 high. So actually, generally speaking, it was Elliott wave principle, which is still my primary tool. So that's why I was sticking to the bearish view. And
let me ask you something,
Greg, so never trust a head and shoulders formation on wave 4, you know, from a top or a bottom.
No, you would expect firstly market to complete a 5-wave decline. Okay, so let me draw this. Okay, you get 5th wave down, and then you get this bounce.
Okay, I got it. So wave 4, it's not going to be valid because you need the head to form on 5.
I think Blake is with us, but your microphone was low, Blake.
Oh,
yes.
I just wanted to say, Greg, that's a great piece of information, and good morning. By the way, you guys.
Good morning, Blake.
Hey, Mr. Yen.
So
this part is getting bigger.
Hello, Mr. Yen.
Hi, good morning.
Mr. Yen.
But let's let Greg finish.
Yes, actually,
right.
So I'm expecting this 5th wave down, okay? And once we have this 5th wave down, this could be then potential head, okay?
Of a new
right
bigger
there.
head and shoulders.
And once you have a wave A, then I would look for a head and shoulder formation after I see a completed 5-wave movement. Okay.
Okay. So, let me ask you something, Greg. Do you think that the mixed performance of the dollar, because we've been seeing the dollar lately having mixed performance, even now that it's dropping, it's not dropping like uniformly against like, you know, every currency out there. Do you think that this is another indication that that push lower is going to be like the last, push
the
towards
final
weakness?
piece.
Yeah.
Yes, I think this could prove to be correct. Also, the reason why I'm looking at this is because we have seen a pretty aggressive sell-off on commodity currencies. So it may be a time for some bounce. Definitely on Aussie dollar, New Zealand dollar, also dollar CAD has moved quite aggressively to the upside. So I'm expecting those pullbacks against the US dollar, which generally means that dollar could be weakening here in the near future and possibly making this 5th wave. So I would look for Aussie dollar, New Zealand dollar, and others to make a bounce, okay, into a corrective phase, only a temporary bounce, and then fall even lower, while dollar index could maybe find a support here for a 5th wave. Okay, so let's say for the next couple of weeks, we could see weaker US dollar even against commodity currencies, because if we take a look on Aussie dollar, we can see here 5 waves of decline, and I was looking for a move down to 75.60 towards this trend line, towards this swing low. We have tested this, so since we are in 5th wave, also 5 sub waves can be counted within wave 5. I think that there can be a bounce coming, and this is matching perfectly with current dollar position, which seems to be turning to the downside. So I would be expecting a bounce, but only temporary bounce on Aussie, while dollar index could retest the lows.
Can I ask something? What's your count currently on the Kiwi? Because I see your Aussie here, which indeed broke to new lows, but the last few days the Kiwi has not broken to new lows, so it had already completed 5 waves down. So it completed.
I think that we may stay here in a corrective phase. Okay, and maybe
so a prolonged correction.
Yes, maybe retest this trend line and then continue to the downside. Okay, but the key here is that we are probably in a correction.
Okay.
So also now when the dollar, is turning lower, I definitely would be interested to go long euro dollar. Euro has been one of the best performers this year, so definitely I want to stay in track with rather with this currency against the US dollar than any other. And as I said, we have seen here a completed wave 4. We bounced from this channel, base channel. We have covered this plenty of times in our past webinar, how this channel works. We have seen a nice turn to the upside, and if we go to 4-hour chart, we are now already approaching this wave B swing high, very decisive push to the upside. So I'm interested to go long, but just need a pullback in 3 waves here. I cannot chase market here at this stage, definitely not. Even if it can go sharply to the upside, I will just wait patiently on a pullback.
We have 2 requests for you. Of course, Blake, it's up to you, mate, because I know you want to speak. We have 2 requests for Gregor specifically.
Please.
One is,
Elliott wave is one of those. I mean, it's a complex subject, so we got him here. Let's address those questions.
one of them is for oil, as I told you, and the other one is if you can show us. Luca is asking if you can show us a specific count for the Nikkei. What you see the Nikkei doing at the moment?
Okay, firstly, crude oil. I have seen this bullish breakout here from this head and shoulders pattern, so I'm looking to the upside. If we go to the weekly chart, as you know, either we are in a wave 3 or wave C. So this is the case of the head and shoulders pattern, okay, that we made sample there on dollar index. So as I said, head and shoulders could work when you have a completed 5-wave move, and that's the case. Okay, it was wave 1, 2, 3, 4, 5, and you have here a head, left shoulder, right shoulder for wave 2 or wave B, and ideally we'll see a strong push to the upside into wave 3 or wave C. Okay, so I'm definitely expecting a market to make a 5-wave movement from this wave to B swing low. So here we are, here on a daily chart. This is still only wave 1, wave 2 pullback, and as you can see, we are still probably just in the middle of this wave 3 unfolding. So, in fact, also I have here my second wave count. Just let me find it. It should be somewhere.
I like that you're also noting down important candlestick formations like that morning star there.
Yes, yes. Actually, I think I posted this on Twitter as well. I'm not really sure. Anyway, here is also another wave count, which is actually a second wave count. You can see that I marked here as a wave B, which means that current rise is actually final of this 3-wave recovery. So it's also a possibility that we are in a correction here.
Yeah, but even in this case, there is a lot of upside from what I say. I mean,
yes,
$7 more.
Because wave C should be made by 5 waves. So this is wave 1, 2, 3, and expecting market to reach higher levels for a wave 5 of C. And also normally this 3-wave rise will stop at the area of a former wave 4, which was 63. Okay, so I see more room for more upside, and despite current sharp decline, could be seen as a wave 4. However, when it comes to trading, I would love to see this sharp decline covered, and only when strong bears are recovered by even stronger bullish reaction, this is confirmation that market has bottomed and that we are in a real strong uptrend for crude oil. So if we go back above 56.30, definitely that would be very interesting for long opportunities to catch wave 5 or 3. Okay.
Perfect. Now, what about the Nikkei that Luca is asking?
I think I have this here on dollar yen.
There it is.
So Nikkei
parabolic.
Firstly, daily chart here. I have been looking here for a 5th wave to the upside within wave 3, which is missing here. So definitely I was not expecting such an extended 5th wave, but still it was a wave 5 that now probably accomplished this black wave 3, which means that market could be ready to make a pullback in 3 waves, something like this. But normally when a 5th wave is extended, you would look for a pullback not to the termination point of wave 4, but to the starting point of wave 4, and that is here. at the top.
So
of
to the end of wave 3, to the blue wave 3 in this case.
Yeah, so that would be an interesting support zone. Also, here was this old swing high and another probably more important swing high from 2015. So I would be looking for a new bounce from this region once we have a 3 waves of decline. If we go to the 4-hour chart, we can see that market made an important throw over here a week or 2 weeks back, a week back probably. We have seen a throw over, and normally when this occurs and when price falls back into this channel, this is indication of a top, and especially it's even more important now when we broke below this channel, okay, which was acceleration channel within wave 5. So I think that we are now trading impulsively lower, and I would be looking for more upside after any 3 wave rally. Okay, and then we fall lower into wave C towards these horizontal lines.
It's what we say when it goes back to the channel. It's what they say in finito la musica, passato la fiesta, right? When the music finishes, the fiesta is over, right?
Exactly. But maybe this party will still continue, but after 3 wave drop.
Yeah, yeah. So you agree that there is more downside left here?
Yes, definitely.
Okay, good.
But also Nikkei was one of the strongest in uptrend, and it was one of the first that showed us evidences of a top last week.
DAX as well. DAX
Yes,
as well. I mean,
so,
that's fair
so
evidence.
maybe that's a leader to everything. I don't know. It should be definitely tracked very closely. And dollar yen is also turning aggressively lower, and I think there is more weakness coming as well. I'm looking for this triangle here, and definitely expecting wave E. And once we get to wave E, probably back, not probably, ideally back towards 110. There we could see a bounce from this lower side of this triangle range, okay, and that's when Nikkei could also complete the 4th wave.
Okay, great.
That makes sense, I guess. Okay.
Blake here.
Blake.
Thank you very much, Gregor.
Hey, Greg, thank you so much.
Your lights.
You know what's I think what's the most interesting thing that you put out there is the Nikkei. Just obviously I'm following it relatively closely. So here, hold on, really quick. I just had it on gold here. But,
Thank you, Gregor.
And thank you, Gregor. But you know, looking at the Nikkei, and you know, obviously we're you know paying pretty close to attention to this move. You were looking for your correction to last all the way back to the beginning of, I forget whatever wave that you had here. You're talking all the way down to 20,000.
Yes.
And that's a hell of a correction. I mean, if you think about, you know, that corrective move that you're talking about,
it's more than 10%.
Yeah, it's like I would say borderline 14% from highs, and that's a big move. Now I'd obviously be very happy if that happened, based on my current positioning in the market. But that's a big correction but at the same time we also rallied 20% in the last couple of months. So is it that big of a correction? I guess. So
yes.
Yeah, that's pretty massive. But you know, to me, the biggest you know, reversal signals that we've seen is like that weekly candle last week. I mean, that was a big, you know, giveaway to what's happening this week. And I think what's going to be really important over the course of the next couple of days is, you know, do we break the 38% retracement? Because, you know, if we start breaking that 38% retracement, that's a general sense of risk off, I think, not only in the Nikkei, but that's probably going to weigh heavily on the other indexes too, whether you're talking, you know, German stocks or U.S. equities or whatnot. So, like I said, if we get some sort of correction like that, that would be very welcome. But thanks, Gregor, for all your input, and Steve too, even though I missed a lot of Steve's analysis. So, hopefully everybody's doing well. I'm going to bring up. I can talk a little bit about the yen. I mean, I'm short the dollar yen. I'm expecting 112. Everybody should know that. I was looking for a little bit of a bounce here. I sold some more at 1285 just after the data, like literally right here after the data. I sold a little bit more dollar yen because I was legging in more at 85. I sold some, but I have orders up at 113 to get short even more. We just didn't make it up there. But like I said, I'm looking for a move down towards the 200-day moving average, or 112 or so. And I know just looking at the analysis not only from Grega but also from Nick, everybody's targeting just below 112. I mean, if you're looking at Nick, she's looking for a target at 111.65, which would be this move right here. I know Grega, he's also, oh shoot, I didn't want to do that. Clicked the wrong thing. Anyway, and Grega's looking for lower prices too. So we are at this point in time, trying to break lower. The 200-day moving average it seems doable. We have to see what happens with risk appetite today. But actually, a couple of the pairs that I'm really looking at is one that I got actually stopped out pretty early and very, very quick yesterday. I actually shorted the Euro Aussie right at the 127% extension in the daily 618. So you can see there's a daily 618 retracement that we hit yesterday, and it was a fib confluence. So I shorted it there. And the data, the wage data out of Australia was so weak overnight. So it really just continued higher. But once we hit the 161% extension this morning, I did short it, because if you look at the 4-hour RSI, I mean, that's, really bonkers strong. Whenever we get to like 161% extension, like a golden fib level, I'm usually willing to step in front of that move no matter what. So especially when we have such overbought conditions. So I did short some Euro Aussie, but I want to take you over to the pound Aussie as well. The pound has been strong, but not that strong. So what I mean by that is the pound dollar has hold on one second. About ready to sell some more dollar yen, actually. I'll stand aside for a second. Anyway, the pound dollar has been stronger, but mostly that's because the euro has drug it higher. Okay, so if you look at the pound Aussie and you look at this this trend line right here, and I'm going to leave you with that. Okay, you can see the multiple touches here, and I don't know, the pound Aussie posted this little false breakout overnight. You can see it right here. Okay, we posted a false breakout. We basically hit the trend line and reversed hard. So, I shorted a small amount of pound Aussie because this thing's a wild mover. I mean, this thing can move 200 pips in a blink of an eye. So I took a really small position here in the pound Aussie, but I like the fact that we did a false breakout. We hit this this trend line. These trend lines, especially when they cross multiple through multiple levels, like it has, they go more unnoticed under the radar. And so, me personally, I'd rather deal with something that's kind of going underneath the radar versus. Hold on one second. Okay, so I'd like to go. I like to trade those that are kind of underneath the radar, especially when you get a false break like that. So as long as we stay below 174, I don't mind being on the short side of the pound Aussie. And like I said, this is one of those that can move so fast. Whenever I trade the Euro Aussie, Euro New Zealand, pound Aussie, pound New Zealand, those currency pairs, because of their very volatile nature and because they can literally, I mean, their ATRs are probably in the, for the four of those, and Euro Canadian and pound Canadian are the same way. They're usually about double everything else. So what does that mean to you as a trader? Well, if you're trading something that's double an ATR, you should probably be trading half or maybe a third of your normal size. So I'm not here to determine what your normal size is. Your normal size is whatever you're comfortable with within your risk parameters. Like, you got a $10,000 account, you're probably only trading, $20,000-$30,000 worth of currency at a time. Well, then if you're going to trade a pound New Zealand or a pound Aussie, you might only trade 10,000 worth of currency, or maybe 20,000 worth of currency. You're going to trade a smaller amount than you normally would. If you got a $100,000 account, instead of trading $100,000 or $200,000 worth of currency, you might only trade half of that. So you have to think about that and take that into account when you're trading these currencies, because they can be extremely wild and volatile, and that's something that I always like to point out, and that's why if I get stopped out and I lose, if I lose 50 pips in a Euro New Zealand trade, it doesn't really affect me a whole lot, because I'm trading a much smaller position size than I normally would on, like, let's say the dollar yen or the euro dollar. But let's also talk about the euro, and I'm sure I'm covering a lot of things that Steve has already covered, but I mean, this has been a massive squeeze, which I'll admittedly, I only captured out of this move from 117 yesterday to where we're at right now, 118.60. I only captured a third of this move. I mean, I was out of my trade yesterday once we hit this 117.56, I think is where I got out, because I knew we were coming into this trend line. And then once we broke that trend line yesterday, all I wanted to do was buy a pullback, and so I put in a bid at 117.50, never got hit overnight, and we surged higher again. This dollar is weak, but at the same time, we've probably stopped out a lot of people already. So I think the dollar is more of a neutral stance at this point, so especially when you're talking the euro. So does that mean you should be shorting the euro right now? I don't necessarily believe that, but I think that you might be able to get some two-way action around here. I don't think that. I think we're at a level now in the euro dollar where you're gonna find some pullback. I'd rather play it to the long side still. You might be able to find a little bit of a pullback here to get long, maybe eventually target, a move above the shoulder as we discussed yesterday, something above here. I think that's still very doable, and with what we're dealing with today. But at the same time, I'm not going to sit here and try to short it either. This has been a very, as LA Wave people would call it, a very impulsive move. So because it's so strong and so impulsive, I don't know if it's the right decision to stand in front of the euro dollar per se. I'd probably just rather buy a dip if we can find a sizable dip, maybe like a 40 or 50 pip dip today, because if you look at the data, the CPI data was basically in line. Core retail sales was a little light. Empire State manufacturing data was a little light. So, the dollar might stay pressured. That means that the euro dollar pullbacks should be fairly minimal. The dollar yen might get a bounce back to 113, but we should get minimal recoveries in the dollar based on the data that we've seen thus far. So those are just a few things that I'm looking at, and like I said, I'm really paying attention to this Euro Aussie and Pound Aussie, also the Aussie New Zealand, which we just cracked this trend line, but at the same time, I look at the Aussie here, and we might have posted a little bit of a false breakout with gold as strong as it is. That's something that could lift the Aussie a little bit or help support it, maybe more so than some other currencies. Dale, did you have an interview today?
I sure do, buddy.
Okay, so it is interview time, and guys, like I said, I just wanted to catch you up on a couple of things. You know, I'm still short the dollar yen, which is working out well, and you know, trying to play some cross rates too. So and it's after actually getting stopped out on my Euro Aussie. I had to dip my toe back in the pool this morning. So so Dale, it's all yours, man.
All right, thank you, Blake. You know, because I book interviews, people have to wait 2 months to address our community. So
Wow.
I hate to make them wait.
No,
a minute,
please.
even an extra minute. You know, I don't want to torture them. So
No, it's good.
we have Barack Kaplan with us, and his Twitter handle is @trading_channels. So
Oh, it should be good.
Yeah, I'm looking forward to speaking to Barack. Barack, I'm going to make you the presenter.
Have a great interview, guys.
Thank you, buddy. Thank you, Blake. Thank you, Steve. Thank you, Grega. And now we're waiting for you, Barack, to hear your voice and your chart. Beautiful. Look at all those channels there.
You hear me, Dale?
I can, Barack. Great to meet you.
Great to meet you too. Thanks for having me.
Oh, you're very welcome. You know what I say about trend lines?
I don't.
Their destiny is to be broken.
Exactly.
All right, but
every trend is broken sooner or later.
Yeah. So, really nice to meet you, and you know,
yeah.
I'm interested in how you got into the industry and how you got from point A to point B, and channels
Sure.
being your method of choice for attacking the markets. Maybe you could tell us how it started for you, buddy.
Yeah. So I live in London since 2007, and I'm an aerospace engineer, by the way. So I did that for quite a while, and then after I came to London in 2007, I got interested in financial markets. And the story is that I exchanged my euros to pound, and that was exactly when the time 2008 crisis hit, and pound dropped 30% against euro in 1 year. And I was like, what's happening? I'm just an ordinary person. So why did I lose this 30%? So I started looking around, and one of my friends who's a trader introduced me to Elliott Wave.
Okay.
And that was in 2009. So I read the book, and I started looking into it and started trading. I just couldn't make it work. So then I started looking around into different blogs, and I read a few other books about technical analysis, and I figured out that I'm more of a visual person.
Okay.
So
that's a great discovery. That's a great discovery.
Yes. So I came across a few blogs where these lines, they kind of started making sense to me. And then, I started trading with the lines, and I forgot about Elliott Wave completely. I started doing single lines, basically only supports and resistances. But then I started using the channels as well, based on a few simple rules that I follow. Very cold, very religiously. I follow these rules, and they're not basically rocket science, but it's just I have to keep things simple. As you can see, I don't use any sort of indicators or moving averages, etc. And I just do it. I don't really try to anticipate where any market will go.
Okay, you wait for confirmation.
Yes.
With tests of channel lines or breakouts or failures, and how many years did it take you to gravitate towards this? Because I've interviewed Schwager, author of Market Wizards, and I asked him once, I said, Jack, what's the most important advice you could give a trader? And he said, to find a trading style that fits or suits their personality. So how many years of the random walk was it before you found this type of work?
I think about 2.5 years.
Okay.
And I blew up 2 accounts.
Okay.
During that
Who
time.
hasn't? Who
Yeah.
hasn't? Okay.
And then I started in 2013, I think in March. I started free blogging on Blogspot. That was tradingchannels.blogspot.com, and I started putting out the charts, and some people liked it because it looks quite simple and it gives clear signals, and also I think more importantly has a good risk control.
How about this? Did you find that by blogging and showing your work that it made you better because you were more accountable? Other people were looking at it.
Oh yeah, absolutely.
You were actually looking at it, so it crystallized your views.
Absolutely.
Going out there. All right.
Yeah, I even when I was doing it, free blogging, I started taking much more disciplined views, and because I was accountable, and I'm doing it for the subscription now, and I even do it even more because I don't want people to lose money because of my analysis and my trade setups. So it has been extremely positive for my trading, this sharing. And of course, as I said, I learned my method, combined and found my own rules, but the fundamentals came from other blogs. So it's basically, this is a world for sharing, and I'm sharing a lot of charts on my public profile.
What blogger was most influential to you that really helped you? I mean, everyone has some kind of mentor or influence.
Yeah, sure.
Who was it?
It is Channels and Patterns. He also started the Art of Chart.
What's the guy's name?
His name is Richard Chamberlain, I think.
Oh, okay.
And his trading and Twitter handle is Spring Hill Jack.
Does he? So he knows he helped you.
I think so. Yeah. I mentioned him.
It doesn't. You have to thank him. So
I do,
yeah. So I'm looking at your yen chart here now, Barak, and I'm going to make an assumption here that because you're a channel guy, and the major channels and trends have been down since the end of the month, or since 114.50, and then we had a sideways channel that happened, say October, November, and that you were probably either looking at selling a rally at a trend line touch on the downtrend, or waited for a breakdown going with the major trend that we just had maybe over the last several days. How's that for a guess?
Yeah, exactly. But I'd like to make maybe a bigger picture. This blue line, which is a fantastic resistance, and that was 1470, and that's exactly where we shorted. 1470 hit, and I like the double plays. So if I get closer, so there was this resistance as well here, which was coinciding with the blue. The blue one that I just showed.
Okay, so the intersection was a confluence line for you.
Yeah. We shorted 14.
You look for confluence lines.
Yes. I mean, let's say not always, but if I see them as more higher probability trades, and they give much better risk control. Clearly, my entry was 114.70, and the stop was 114.90. So that's 20 pips risk, and I think today is already 200 pips. So I mean, it's not always this perfect, but when I catch it like this, I just milk it.
Okay, well that's a great talent, because if I have a shortcoming, it's not riding things to longer term targets, because I see too much noise, and I believe that I could always re-enter at a better price, and I'm covering a position. So what keeps you in a trade like this from the highs?
So this
Greed?
was another. This was another.
I mean, do you trade it,
break.
or do you,
Yeah.
or you have the same position on from 1470 today, or have you been taking maybe partial profits along the way and adding to the position along the way?
Yeah, that's a good
And
question.
If so, how? Where? How and where?
So what I did was we at 113.80. This was the break of this support, confirmed support here. It broke down at the fourth hit, and it back tested. So I was going short, even adding more short at 113.80, and then I covered the second position at 113.30. So that's 50 pips, and I kept the one that is from the very top. And exactly as we are talking, it is now bouncing off the red bottom band. And I am very tempted now to close half of that position. And
Okay.
if I have these internal resistances that I always plot inside the channels, and if it moves a bit more into the channel, I may close half of it, because if this red one breaks to the upside, it is like a bull flag, and then it may retest 114, and that's what I don't want to be holding on my hands. I mean, it's already quite good gains at the moment.
All right, so I see the major channel lines. How do you decide to draw what I used to call speed lines or internal trend lines?
Yeah, so the internal ones are basically what you have from the past within the channel. And the channel walls, I always look at 2 hits on both sides. And this is confirmed when it bounced, really. And of course, it may break down this bottom band, and that's exactly what I'm hoping for. And that would be really, a declining channel breaking to the downside. That would be awesome. But currently, this channel is a confirmed channel, and I can always I always look into these internals to basically have a higher probability of a channel forming as well. So as long as these internal supports and resistances are there, and they are confirming the internal corridors of the channel, then you can also expect the outer bands of the channel to be holding as well.
Okay, I like that term, corridor. So there were a lot of people, Rock, looking at what they believed was a head and shoulders top in Euro. You got the breakdown, but it was really just a bear trap. I'm curious what your channel work is telling you on either the dollar or the euro. Okay.
So the orange one is a proper bull flag, which I've been looking into for quite some time since it started, since it hit here on the 3rd. You see on the bottom band on the 3rd, it bounced again.
Right.
So here these two hits, and here is 2 hits, and it was already very promising. And the 3rd one, when it bounced, I became quite bullish. Although it made another low, I was looking into this larger channel as well, that is from the January 2007 lows. After the bounce, I was looking into the blue internal resistance. Actually, 2 days ago, this was one of the free charts, and I said this internal resistance, once it breaks to the upside, you can see there is a harmony here. So these supports and these 3 hits on this line, and once it's broken, I was turning more bullish to expect a breakout on this orange orange bull
Okay,
flag.
so let's imagine, you know, it's easy to go back and everyone goes back and said, I did this, I did that, I did that.
Yeah.
It was perfect. So let's do an exercise here. Imagine you're flat, the euro right now, and you have all your lines in play here. How would you handle it? Would you buy pullback to your blue line or gold line? And would your target be the red line up around 120 as time goes on?
Because first answer is I would try a blue backtest of the blue at the top, and this momentum shouldn't be lost very, very quickly, and I think if it breaks it down a little bit, then the orange top band would be another buying level. I wouldn't short this at the moment, because the orange channel is a bull flag. I would expect a new high to 121.
Okay, nice. Any view on your home currency that you lost 30% on when you moved to the UK? Maybe a trade to help you get that back?
Yeah. So we have a beautiful channel here, the blue one, from 2016 lows, and that's it's been holding. So the bottom band has been holding. So your channel work could include horizontal channels too. It's not always like an uptrend or a downtrend. Channel work could be a trading range as well. Yes.
Is that correct?
Yes. As long as I said, it fits these very simple rules. Then yes. As long as they are in range bound like this, and if you can contain them within the channel walls, yeah, why not? That's definitely what I'm doing.
Okay, so your flat cable right now, based upon all the lines that you have drawn on this chart,
I'm flat cable, but yeah.
Go ahead.
I want to buy it now at the break of the green resistance.
Okay, you want to buy strength.
Yes, because the blue channel is holding, that's a good risk control. As long as the blue bottom band is holding, and the green resistance, which has been just confirmed today with those 3 hits, the fourth one, or latest the fifth one, if and when it breaks, I would be a buyer with a stop below the blue support.
Okay, so what else is on your radar? Do you cover all the majors? Do you cover any commodities? Yes. Or
I cover the general, the most popular commodities like oil, natural gas, gold, silver, copper, platinum, and then also the agricultural commodities like soybeans, wheat, corn, coffee. Yeah.
I'm curious. What would be the maximum amount of positions that you would have on at any one time?
I don't want to have more than 4.
Okay. Because more than that makes your head explode. Like. Yeah. Okay.
That's experience, entirely experience. I don't want to have more than 4.
Okay. I heard a great line that if you can't remember the last price of any instrument you're trading too many.
Yeah, exactly. So I keep posting all of these charts for my members, but I don't take every call or every market. That's impossible. I have already a lot on my plate. I follow indices as well, so 5 major indices. I actually started following NASDAQ as well.
So what's the S&P telling you right now? Is the trend shifting here?
Okay, so let me look at the long-term one first. This red channel from 2009 lows. This hit was quite precise at the top end on the red.
Okay.
And
It got
the
through it
orange,
just a little bit, didn't it? It got through it just a little
yeah,
bit.
slightly, but then
Yeah.
because it was the combination of the orange one, I think the first trader, I couldn't catch his name. He also showed the same channel, that this is the orange one.
Okay.
And then we have the green one that is started from end of August. You can see the top hits on the two top hits, and just recently it broke down at the 4th, so we shorted it at 2,570. And let me show you this one. I normally don't do these rectangles unless they are very obvious, but here it is, very obvious horizontal support. So there's 1, 2, 3, 4, 5 tests already since end of October. So I think if this level, which is what is it, 2563, I think 2562. If we go below that, I think we're going down within the blue speculative channel, I would say.
Okay. I have one more request from the audience.
Sure.
Ash would like to get your look on wheat.
On wheat.
On wheat.
That's
You
my.
know who my commodity trading legend is? It's Joseph was the best commodity trader because he knew when to fill up his bins for a famine. So, so what's it look like to you here, buddy?
I mean, wheat has been quite troublesome for me, I must admit. And the reason was this resistance. After the break of this blue one, I thought the back test would hold and we would keep on going, but it didn't. So it completely smashed back below it.
That's a tough one.
It is very tough. But the black one, which is the channel right from the 2008 high, not too bad. The internal lines are pretty.
This channel almost looks like an Andrews pitchfork. You ever get the people saying, "Is that a pitchfork, Barack?"
Yeah, some people mention to me that it may be similar to them, and some of them, yes, they are the Andrew pitchfork. So if you put the high here and then put one of the forks here and the other one there, it may be able to exactly follow this channel. Okay. That's correct.
Okay, so you're pretty neutral. You're going to be watching the support level maybe for.
I am. I'm not taking any positions here because I took a loss on this one during this massive sell-off here.
Yeah. So why don't you take the time now to show our viewers and listeners your website and the best way for people that are watching you live, and we're taping it too, so there will be a video of how they could reach you and what you offer on your service.
My website is tradingchannels.uk.
You want to show it?
Yeah, sure.
So this is how we, reciprocate for you coming here and providing some great content and edifying our community.
Thanks. Thank you very much. So what I do is I have a Twitter handle for members only, so subscribers only.
Okay, so you have a public and a private Twitter.
Exactly. Okay. I have those. I have that one, and I also have the daily charts every evening, close of the day. I publish about 13, 14 charts, and during the day I give chart updates and trade setups during the day. And I also I have long-term charts here on indices, Forex, commodities, and the agricultural ones. So yeah, it's
Well said.
yeah, thank you.
All right. Well, thank you so much for being with us today, Barak. It's really
You're
a pleasure
welcome.
to meet you.
Mhm.
And, you know, I'll continue to tweet your stuff, and, you know, feel free to post in my stream. And
Thank you very much.
you know, I like your work, and I'd like to be able to call you from this day forward, my trading warrior brother. You accept it?
Thank you very much. Thanks for having me, Dale.
All right, Barak, it's a pleasure, and may pips rain down on you throughout the rest of the year and into
you.
2018, buddy.
Thank you. Bye-bye.
Bye-bye, Barak. Okay, that's it, Face. What a great day. Huh? Tell me it wasn't a great day. And you know, if it's free, it's me. So if you want to say thank you for all the great content that we provide, sign up. At least take the 10-day trial. Go check Barak's stuff out too. It looks to be real clean looking channel work. And I'll see everyone for Thankful Thursday. And we're thankful every day, not just on Thursday, that we even have excess capital to take risk with. When there are people out there that don't know where they're going to sleep tonight or where their next meal is coming from. So above all, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thank you, team. Thank you, Blake, Grega, Steve Volge, Stelios, Nick, where are you? We miss you. See everyone later. Adios.